Good evening, traders, and welcome to the Traders Corner daily market update for the 14th of December 2010. Well, today was a big day on the data front, with a lot of economic releases coming out of Europe and the US. Fortunately, all of that data was actually positive. So in the US, we had the retail sales come out better than expected. The German ZEW was better than expected. The PPI was better than expected. We even had the inflation numbers come out of the UK, which was higher than expected. So across the board today, we had better than expected data. But what that manifests itself in terms of price action in the chart is a lot of volatility. So if we take a look at the euro dollar in a second, you'll see that we basically had price swings of 50 to 100 points one way, then back again, then back again, then back again. So we didn't have very much direction, but we did have a lot of volatility, which is a great thing for intraday traders. But for longer term traders such as ourselves, it's just kind of a bit of a nothingness. And obviously it did affect our trades, but we'll get into that when we look at the charts in a second. Just before we do that, we'll talk briefly about the fact that the US kept their rates unchanged, which isn't really news to anybody now. The rates are where they've been for pretty much the last 2 years now, and I don't think anybody in the market was expecting a hike at this time. What people were more focused on was whether the Fed were going to continue with the 600 billion Treasury purchase program, which they announced back in November. Obviously, we've had better data than expected over the past month, so the market was kind of taking a look at this and wondering whether maybe they'll rein in some of that, or if they're going to continue to go gung ho and continue with their plan that they announced in November, which is in fact what they did, which you can look at it as being a good or a bad thing. Obviously they're pumping liquidity into the system, which can cause higher inflation, or that's what people say, but that's looking a long term down the line. What it actually will do for the economy in the short term is obviously, it will stimulate their economy, or that's the hope. So in the short term, it's a good thing, although in the long term, it's still debatable. We'll see how they can withdraw this from the system when the time comes. But anyway, enough of that. Let's go and take a look at the charts and check out, see what the price action was like today. Okay, so let's start with the euro dollar, as that's the one we were talking about just now. As you can see, if we zoom into this chart here, we're on the daily, and we have pretty much sort of like a shooting star type formation occurring here at this significant level, which was a 3430. Now yesterday we said that if we got above this level, we're going to stop ourselves out from the short that we were in and go long, which is actually what we did do. However, when we did go long, we kept a tight stop just below this level here, which literally got taken out just this afternoon. So we were short here. The market moved above. We said that our plans, if it moved above here, we thought it would indicate a trend reversal. So we got long above this level. Unfortunately, not long after reaching this level here, market completely turned against us, came back down and hit our stop somewhere down here. So a little bit unlucky there, but that's what the market dealt us. When I was looking at the chart, I was just sort of scrolling back, and had I realized that it had been such a strong level in the past. I mean, here we have the market's broken through it, it's come up, it's found a level of resistance. Here the same line acted as support. Again, some resistance here, some support, same sort of level, resistance. We got resistance here, the market acted, this level acted as support over here. If we go for, again, the acts as support here again. So basically what I'm trying to get at is that this level has been a very, very strong level in the past, and I guess we really didn't give it enough respect. We sort of just stopped ourselves out and jumped in the other direction in anticipation of a bigger move. Had we given this level maybe the respect it deserved, we perhaps would have waited for some kind of confirmation that that this was a true break to the upside. Instead, we jumped in maybe a little bit hastily, a little bit too early, and got stopped out to the downside. Right now, our plan for this is we're looking to short this on a break below this level over here. Let's just get it. So if the market breaks down below this level, we're going to look to short this particular candlestick formation. So if we just zoom in again here, you see the market's gone up, and obviously the market's pushed this all the way up here, then the sellers got involved and pushed it all the way back down. So we can see there's a lot of selling pressure around this level here. If we get the break below this in the next candle, we're going to be in for the short there. So this is one to watch, and we'll see how that goes. Moving on to the other charts now, we also got involved in the short dollar franc position, as we said we would yesterday. We broke this level here, which is an important level. We actually got in somewhere around here, and we've been short ever since. The market's found a little bit of support around this particular level, which was a significant level of support beforehand. So if we can break through that, then maybe we can get some nice moves to the downside, but we'll just wait and see what happens there. Going through the rest of the charts, there really isn't much at the moment that we're looking to do on the other pairs. Euro pound, if we get about above this level, we'll look to go long. Although having said that, fundamentally we believe there will be some weakness in the euro over the coming weeks. So we're not counting our chickens. We'll take a cautious approach if we do indeed get that signal to go long. As is with the euro dollar. I mean, at the moment we're biased towards a short type trade. However, if we do get a long trade, we're not going to be taking it until we get a break above this level here, some kind of confirmed direction and good price action there. So taking a look at the Aussie dollar, we're coming back up to that parity level. If we take a look to see what happened at parity last time, we got this massive reversal up here. So again, this is something we're going to be cautious about. It's a Christmas period now, so these can provide quite volatile markets. Apart from that, not really very much else that we're interested in trading at the moment. But as always, we'll keep you updated as and when anything presents itself. So at the moment, just to recap, looking for a short opportunity in the euro dollar. Fundamentally, we believe that's going to be the better trade. We've got positive data out of the US. We don't believe the sovereign debt crisis is over by any stretch of the imagination. We believe there's going to be something else that's going to come into the frame at some point. The markets will start to then home in on that, and that will cause some negative euro sentiment. So right now we're just going to sit here, watch this, and see what happens. And we're also nursing this dollar franc trade right here, so we'd like some further move to the downside. And we'll take things from there. So thanks again for listening, and as always, we look forward to speaking to you tomorrow. Take care.